Let's take a look at the PERS benefit package. This will be a high-level overview. I encourage you to make an appointment with one of the retirement counselors if you would like to do a deep dive into your individual set of circumstances. The Public Employees Retirement System Defined Benefit Plan has 3 tiers. The tier is typically determined by when the member first entered PERS service. This retirement plan provides for a lifetime monthly benefit and also provides for health and welfare benefits, some that are potentially paid for by the system and some offered as optional plans at the time of retirement with eligibility. The different tiers exist because of changes in law, with the underlying principle that benefits cannot be diminished. All 3 tiers have access to the same benefits with different eligibility requirements depending on tier level. By statute, the defined benefit plan allows for additional voluntary savings. The post-tax contributions are all made by the member, with a minimum of $5 and a maximum of 5% of gross pay per pay period. The account earns interest compounded semi-annually at 4.5%. At distribution, the interest earned is the only portion of the account that is taxed. Members can opt in or out of this plan at will. There is no open enrollment period. Payment options at termination or retirement include lump sum distribution, life annuity, and installments over a designated period. Vesting indicates ownership of or entitlement to a benefit. To vest in the PERS defined benefit plan, a PERS Tier 1 or Tier 2 member must have 5 years of paid-up membership service to own the pension and medical benefits. A PERS Tier 3 member must have 5 years of paid-up membership service to own the pension benefit and 10 years of service for the medical benefits. Once vested, a member is entitled to the benefits afforded by the plan, subject to the eligibility requirements for the tier level to which they belong. Eligibility for retirement can be gained by either age or service. For members belonging to Tier 1, age eligibility for normal retirement is 55, with early retirement option at age 50. For Tiers 2 and 3, age eligibility for normal retirement is 60, with early retirement available at age 55. For either early or normal retirement, a member must be vested. Any early benefit is subject to a reduction of 0.5% per month early. This could result in as much as a 30% reduction if retiring 5 years early. It's important to note that this is a reduction for the lifetime of the benefit. All 3 tiers can retire at any age with 20 years of paid-up peace officer or firefighter membership service, or 30 years of paid-up membership service for all other employees. Membership service means worked service. There are additional ways to meet eligibility, like some claimed and paid-for service and work in legislative sessions. If you have any of those to be considered, be sure to talk to a counselor about options. There are a couple of important things to keep in mind. Commonly referred to as the 115-day rule, for all PERS members, a salary from the final year worked can be used as part of the calculation if a member was in pay status 115 days in the calendar year. An important fact to note, if the 115th day of the year falls on a weekend, a member would need to work the following Monday in order to receive the service credit for the weekend. In addition, it will take part-time workers additional time to accrue the 115 days of service as they earn prorated service. In some areas around the state, there are geographical differentials added to the base salary for State of Alaska PERS members. The differential pay can be used in the calculation of a benefit for a PERS Tier 1 member. For PERS Tier 2 and Tier 3 members, this additional pay can be used in the calculation if it is received for more than 50% of the member's service. If the geographical differential is not received for more than 50% of the service and cannot be used in the calculation of the retirement benefit, the member's contributions on the differential salary will be refunded at the time of retirement. Claiming service may increase the retirement benefit and in some cases can be used towards vesting and retirement eligibility. Some of the more common options include military service, both active and call to duty, full-time temporary service, and workers' compensation leave without pay. Each can be claimed and have associated rules and process. Except for workers' compensation, you must be vested to claim service. Once claimed, an indebtedness is established for the service, and it will accrue 7% interest as prescribed by regulation, compounded annually, until it is paid in full or until retirement, whichever comes first. Payments can be made over time or in a lump sum with either pre-tax or post-tax funds. If the indebtedness is not paid in full when you retire, if monetarily beneficial, the retirement benefit can be actuarially reduced to purchase the service. In addition, PERS members had the ability to reinstate refunded service up until June 30th, 2010. If you reinstated service and it has not been paid for, it may be paid for with post-tax funds. Or, if monetarily beneficial, the retirement benefit can be actuarially reduced to purchase the service. If you are married, your spouse has a right to a survivor benefit. Under certain circumstances, an incapacitated child can be appointed as the survivor with approval of the administrator. Under the joint and survivor option, the regular retirement benefit is actuarially reduced to purchase the survivor benefit, and in the event of your death, your spouse would receive a lifetime benefit in the amount of either 50% or 75% of the monthly benefit you had been receiving while alive. If your spouse dies first, under the joint and survivor option, your benefit does not change. The third option is typically referred to as the last survivor option and offered to PERS Tiers 1 and 2. Under this option, the regular retirement benefit is actuarially reduced to purchase the survivor benefit, and in the event of death of either you or your spouse, the benefit decreases to 66 2/3 of the monthly benefit you had been receiving while both were alive. This differs from the 50% and 75% joint and survivor options, where your benefit never decreases. In the event of your death, health insurance eligibility continues for your spouse only if a survivor option is chosen. The level income option benefit offered to PERS Tier 1 and 2 members is designed to provide a level income to retirees who anticipate Social Security retirement or other sources of income at age 65. The option pays an increased benefit prior to age 65, then permanently decreases at age 65. It does not provide a benefit to your spouse in the event of your death. The other decision points in the retirement process involve the health and welfare benefits offered with the PERS. For PERS Tier 1 members, system-paid retiree medical is available at the time of retirement for the member and family. PERS Tier 2 and 3 members are offered system-paid medical for themselves and eligible dependents at age 60, or at any age with 25 years of peace officer or firefighter service, or 30 years of all others service. PERS Tier 3 has the additional requirement of at least 10 years of service for eligibility for the medical benefit. If a PERS Tier 2 or 3 member retires prior to age 60, or a survivor is less than 60 years old and are eligible for the medical benefit, it can be purchased by paying the premium until age eligible for the system-paid coverage at 60. The dental vision audio coverage is offered as an optional insurance for purchase. There are levels to cover retiree only, retiree and spouse, retiree and children, and retiree and family. Each has an associated premium. PERS Tier 1 retirees must choose or not choose to elect coverage at the time of retirement because they are eligible for the system-paid medical coverage. PERS Tier 2 and 3 retirees who are eligible for the system-paid medical must also make the choice to enroll or not in the DVA coverage at the time of retirement. If not eligible for the system-paid medical and required to pay a premium if electing the medical coverage, the DVA coverage can be elected at the time of retirement or at open enrollment, but only if the same or increased level of medical coverage is being elected for the first time during the open enrollment period. One of the most difficult decision points in the retirement process seems to be long-term care insurance. This coverage is offered as optional insurance for purchase, and the decision to enroll or not enroll must be made at the time of retirement. If you choose coverage for yourself, you may choose to cover your spouse. The premium is based on age at retirement, and if covering a spouse, the additional premium is based on their age at your retirement. There are 3 levels of coverage, and all cover the same services, have the same eligibility requirements, and require the same 90-day waiting period before the benefit begins to pay. This means a person would have to be receiving long-term care services for 90 days before this insurance begins to pay a benefit. The difference in the 3 coverages is the inflation protection for the gold and platinum daily rates and lifetime maximums. The gold coverage increases the base benefit by 5% each year, and the platinum increases 5% on the prior year's benefit annually. The inflation protection ends at age 85. The benefit is still available, but will have grown as much as it's going to by age 85. The state of Alaska offers several different life insurance policies to meet the needs of active employees. These include Select Life and a voluntary supplemental policy for purchase, and Basic Life sponsored by the state of Alaska. The Select Life is the only coverage that can continue into retirement by enrolling in optional life at the time of retirement. In order to enroll in the optional life coverage, the Select Life coverage must be in effect at the time of termination. For state of Alaska employees, enrollment in either or both select or voluntary supplemental coverages can be done annually at open enrollment in November, effective January 1 of the following year. If unsure about what coverage you have, please feel free to contact the Member Services Center. Once all the decisions are made, it's time to retire. There's an application packet available to download from the Retirement and Benefits website, or you can request a hard copy by contacting the Member Services Center. You may want to consider consulting with a retirement and benefits counselor. Appointments are available by phone. Counselors can answer any questions you might have regarding the plans and make sure you have all the information you need to make informed decisions regarding the benefits offered at retirement. Once completed, the application must be submitted prior to the effective date of retirement. The division suggests an ideal submission 6 to 8 weeks prior to retirement. Once submitted, the application is assigned to a processing technician who reviews and confirms receipt of the application with a standard response letter and is in touch if there is additional information required. Once appointed to retirement, a second letter is mailed outlining your benefits as well as the decisions you made regarding the survivor benefit, retiree medical, dental vision audio, and long-term care insurances. This letter is mailed at the same time as distribution of the first retirement benefit, and there is a 15-day window from the date of the letter to be in touch with the division if there was a mistake made in the processing of your application. There are a couple of additional benefits that may be available for you. The Alaska Cost of Living Allowance, based on tier and age, can add 10% to the base benefit or $50, whichever is a better benefit. Eligibility requires residing in Alaska, which means domiciled and physically present, and not being out of the state for a continuous period exceeding 90 days. If planning to be gone for more than 90 days in order to avoid an overpayment situation, a retiree should notify the division and the benefit can be stopped and applied for upon return. If a retiree must be out of the state for medical reasons, a physician's certificate of necessity can allow for absence up to 6 months while still receiving the benefit. For PERS Tier 1, this benefit is available to members at retirement. For PERS Tiers 2 and 3, it is available at age 65, and retirees must actively apply to be afforded the benefit. The post-retirement pension adjustments are an automatic adjustment that requires no action by the retiree. This increase is payable to eligible PERS retirees when the cost of living increases based on the Consumer Price Index for urban wage earners and clerical workers for Anchorage. Eligibility includes PERS retirees at age 60 or under age 60 if retiring and receiving benefits for 5 years. In addition, a retiree must have been receiving a benefit in the prior year to be eligible for the next year's PRPA. Eligible recipients who have not received pension benefits during the entire preceding calendar year will receive a prorated PRPA. Recipients aged 60 to 64 on July 1 will receive 50% of the CPI change. Retirees aged 65 or older receive 75% of the CPI. This benefit compounds, meaning the PRPA is added to the base benefit plus prior year's PRPAs. A retiree does not have to live in Alaska to receive this benefit. Both the Alaska statutes governing the retirement plans and the IRS, which allows contributions to the retirement plans be made on a pre-tax basis, require bona fide separation of employment before any distribution of retirement funds can occur. A bona fide separation of employment is total separation of the employer-employee relationship. If you have a pre-arrangement for reemployment of any kind, it does not meet the separation requirement. The retirement application requires certification regarding pre-arrangement for reemployment. In addition to the bona fide separation requirement, a break in service is also required before a member can return to work with the same employer. If under 62 years old, the required break is 6 months. 62 or older, the required break is 60 days. And under no circumstances can there be a pre-arrangement for reemployment. It is very important to be certain there is no pre-arrangement for reemployment and that the appropriate waiting period is observed. You have a lot of resources when it comes to your benefits. The Member Services Contact Center serves active, inactive, retiring, or retired members and is really the first point of contact for questions regarding retirement, health, and optional benefits. They can be reached by calling 800-821-2251 or 907-465-4460, Monday through Thursday, 8:30 a.m. to 4 p.m., and Friday, 8:30 a.m. to 3 p.m. The website can be accessed at doa.alaska.gov/DRB and contains a wealth of information about your benefits and links to schedule an appointment with a retirement and benefits counselor.